I don't have to.
Welcome, Abhinav, retired in the stock market. Are we in session 10?
We're in session 10.
How are you?
I'm great. How are you doing?
Good. January 17th, 2025. Uh, you got any questions for me today?
I have one about a particular position, and then
You want to talk
uh,
about that recorded or offline?
yeah, let's do it. It's not on mine. Yeah, one of the questions was, we've had such a great run in quantum last year, and then all of a sudden we had a little pullback because of our boy Jensen and Mark and all these guys talking shit about quantum. But at that time, since I had sold leaps, it was actually a great thing. I could close them out early if I wanted to. What I ended up doing is taking one of my leaps that was at a $55 strike for Ion Q, and I lowered it down to 30, and I got some more money out of it. And my question is really like, so I did that, and then obviously the stock is swinging back up now, and we're at $39 price today. And I have a 30 call that I sold for
Is that
2020.
the two, is that the 2 year?
Yeah.
Now, think about all that money you're getting back,
Yes.
whereas the average shareholder doesn't have all that cash to play with. 2 year advanced, think of it like an advanced, when you're working, you can get what's called a advance on your paycheck. Sometimes they'll give that to you, maybe not all the time. But
Payday loans or whatever.
no, from your own job, from your
Oh.
advance on your paycheck. Like, let's say you tell your boss, hey, I need my check early. Can you give me like a 2 week advance? They don't do that anymore.
I mean, not in my type of work, but maybe.
Man, these jobs aren't. Well, I just saw a Stranger Things where the mother, Renata Ryder, took a 2 week pay advance on her paycheck.
Mm,
She needed to go search for her son.
mm.
And so, first of all, I want to say that you're still long, so you're okay.
Yes.
Does it show you the delta on fidelity? I think I talked about a 2 year delta is minus 60, give or take, depending on the strike price. And then 100 shares is delta 100. So you still have 40 delta positive. So if you look
Mm.
at your delta for the call, for the 2 year call that you wrote, that you lowered, you should still have a delta, maybe a minus 70. I don't know what it's going to be. If it's 30,
Mm.
minus 75.
I'm checking right
Can
now.
you find out?
Yeah.
And let's say it's minus 70, right? So now you still, or 75 even,
It's
you still,
minus
go ahead.
point. It's not mine, but it just says 0.82. But I guess it's minus from the 100, right? So
Yeah, so, well, you sold it, so it's minus.
yeah.
So 22. So you're still making $18 every time IQ goes up. So you're still long. Okay, that's the first thing. So you can leave it for a while. The plan probably for you is to buy it back at a dip. Okay,
Got it.
or if you think quantum is doing a little better, if you're a little more positive, then you can wait for a dip and then raise it up. So let's say bring it from a 30 to, let's say, a 55. Okay.
Got it.
Now, if you're going to get 15 points of 25 points of share of potential share growth, guess how much it would cost you in premium?
Probably 25
No, it'll probably cost you like $7 or $6.
because the stock is down when you do it.
No, because you're buying back opportunity 2 years away.
Okay.
Let's look at it now. Let's look at it now. Pull out the 2 year. This is your
Yeah,
question, okay?
I got it.
You have the 30 strike for quantum, and we're at 40, so we're $10 in the money. Now it's down today, but I wouldn't consider today a big down day, but it's down to buck 50.
Yeah, something like that.
So first of all, when you lowered it, the theory is that you're giving yourself more protection, right?
Yeah.
We don't know where it's going to be in 2 years. It can still go down anyway. Even if you buy it up to back to 55, you raise it, and if let's say it costs you, I don't know, $7, depending on how much it costs you. $8. It can still come down, and then just like you misplanned your trade, you know. So for one, you can leave it there, just hang out there, you get that protection. You're long and short. You technically already got your money back. You got a nice advance, moving it from writing it at what 60, and then moving it down to 30. Like
55 down to 30, yeah. And I mean, I did the math on
can
this.
we? What you did the math, and
Let me tell you, I think this is interesting and it's probably good to remember this. So for example, um, pulling up my notes on this.
I want to know how much money you got back off that trade.
So, okay, when I first wrote so when I first wrote the 55, I got back 12.97. Then wait, hold on a second.
Bet the stock was only about 25 then. It's probably got 50%.
Yeah, this is wrong. Hold on.
I remember getting like 19 for doing
Okay, so basically what I was saying is, okay, so originally I got 2,200.
2200.
And then what I did is when I lowered it, I had to pay 12.97. But then when I sold I'm sorry, when I bought back to close it, I had to pay 12.97 because it was on a dip. But then when I sold the 30, I got paid 17.01. So if you add that all up, I got paid 26.50, which is higher than the original
Sorry.
22.46 that I got paid.
Just do like $5 more than like so. Subtract the cost of buying it back, and then the price you wrote it again. It's like five something. How much is that price? So I'm gonna notate 2200.
Yeah,
Check, and then another 500. How much is the difference of the trade on the last one? Five something.
I made $405 more. Yeah,
405.
yeah.
405.
When I did the 30,
So 2605 back. Okay.
that's right. 26.50 is my math.
Now, is that 24 months?
Yeah,
Let's do the math. 2605. That's how much money you're borrowing off your shares. Divided by 24 months. It's
100.
$108.54 per month you're getting.
Yeah,
So that has value, and you're reinvesting that money now, right?
absolutely.
Now, again, you are still long. So let's say your Delta is 82, which is a negative 82 now, and your shares represent 100. So you're still Delta 18. So let's say quantum goes to $1 today. You made $18 in your account. Your account will go up $18. It makes sense.
Yep.
But then at the end of the 2 years, if we're still in this trade, if we didn't move it to a different trade, you're gonna have quantum at $30, $3,000, 100 shares of quantum, and you can do the trade again, of course. So what's probably gonna happen is as long as quantum strengthens and improves, we can see an uptrend. Kind of like I'm going to show you this behind me. Just
Yeah,
shows a
that's
nice
coming.
uptrend. You can see I just started a little line. We're following trends, so we're identifying and we're following trends. We're going with the trend, right? So um, so if we think that quantum is going to come back up and peak up, and it's kind of good that it had a nice pullback, even though it was kind of shady on what they did. They just kind of like badmouth quantum, Zuckerberg and the video CEO just badmouth quantum, and then it kind of sold off. And then what? The next thing they're pushing their quantum in their own companies. Quantum, we're doing quantum, and starts coming back. So it's good because it kind of let out some hot air, some bad blood, and now the point that it's coming back kind of shows that it's more legit, and the worst is probably over. I think maybe. So I think that's a good thing. So when it's the right time, maybe at a nice dip, um, if you feel confident, raise your 30 back to a 50 or raise it to a 40. Maybe do it in increments. And then if you still feel confident, then raise it back to let's say a 60, and then keep going. And if by next year, if I1Q is 100, you might have it at 100 or maybe 120. You see the point?
Yeah.
Now, let's say how much would it cost you? Just take a look now. Let's say we
Okay.
raise it back to 45. Buy,
So I
buy
put
the
it,
30,
yeah, by the
sell the
30.
45, and that's 15 points a share go. How much would it cost you?
So that would be a net debit, right? Yeah. So it'd be not much, 334.
So for $3, for 330, you're getting 15 points of share growth.
Not bad.
See how valuable that is?
Yeah.
When you're ready, if your account's doing better, the market's doing better. You had us in a descending wedge pattern, I think. You're going to be full correction. So if you think that's still happening, then I wouldn't do it, right?
Yeah.
So check your technical analysis. And today I want to talk about some patterns, some technical analysis.
Perfect.
Check your technical analysis, and when you're ready, you're confident that we're not going to crash and the economy's going to come back, then I would start moving it up.
By the way, that channel that I showed you yesterday, the spy and the Qs broke out of it today. Let's look at the
Yeah,
IWM. The
you're
IWM got rejected, and the DJI also tried to break out, but it's pulling back.
the IWM's important because it's showing 2,000 of our small stocks,
Yeah,
and for some reason they have a mind of their own. They don't necessarily follow the big stocks,
yeah,
and that's why I say when you get a trend line, see if you can get a Dow Jones confirmation, which is a fat dividend stock, I like to call them. The SP 500, which is probably the most important one. The IWM. And did you do the Qs? What was the other one? We did four.
yeah. Qs.
QQQ. So the top 100 tech stocks. So SPY, QQQ, DIA, and then the IWM. And if you get a confirmation on all four, it's probably going to happen. But what you saw was it was going down, and you're thinking, oh, we're going to correct, right? But then what I said, not enough confirmation. Let's see how much. The more it goes down, the more it's going down. If it goes down a little bit, it can always correct. So I was saying more confirmation,
Right.
and you're saying it broke out now. Now we're going higher now.
Yeah, it broke out. At least the spy and the Qs did.
I think part of it's inauguration.
Yeah, I mean, obviously, when Tesla's up, the Qs and spy is going to go up too.
You didn't have a ton of puts anyways, did you?
I have a decent amount.
There's some people who were net short,
I
and
mean, I
they're
don't have
getting.
like enough to make a dent in the account, but I have a decent short.
Imagine some traders that are net short because they think we're going to do a crash, and we had a 600-point day the other day, 300, 400-point day today, and I mean the Dow Jones. How did they feel?
They're probably getting squeezed.
They're getting squeezed, and this is the lesson that it's difficult to forecast the market. It's kind of difficult, and it's easy to just write calls, write puts, isn't it?
It's the best.
And
But
that's
did
what
I
I
tell
want
you
you to
today?
focus on.
I wrote a Tesla covered call today. Guess how much I got paid?
Tell us.
I got paid $3,000 on a monthly call. That's like rent money. That's like mortgage money right there.
So walk us through the trades for the new investor. You buy
I mean, look, so here's
100
what I
shares of
did.
Tesla.
Yeah, I bought 100 shares of Tesla. I bought these sometime in December. I wrote a covered call that was going to expire today, the 17th of January. Um, my strike on that one that was going to expire was 470, and the current price for that in the morning when I opened up my portfolio, the current price to buy that one back was only $2. So I thought to myself, okay, Tesla is in an uptrend today, which means when the stock is up, I can get a good premium on covered calls. So instead of waiting till the end of the day, I ended up buying back my call for $2, closing it out. And then I wrote a covered call on Tesla for 450 strike, ending in February 21st, roughly a month out. And for that, I got paid $3,000. and that's a really really good trade. It's actually more than I got paid on my covered call last month for the same set of shares, right? So pretty good.
$3,000. That's awesome.
Yeah, and I mean Tesla is probably my new favorite stock, my man.
Mhm. Part of it is timing, right? Because it's
Timing,
heating up around inauguration,
yes, timing.
and we're up. Like you said, you wrote the cover call when the stock is up, you get more premium, and you're buying back your one that's expiring today for $2. Is still it's still you're still getting back money, right? But you figure it's worth it because
Oh yeah,
um, right now you can do next month, and you don't know if we're gonna have a good day like this for sure.
yeah,
Again, so take advantage of the day we're gonna have it, and you're right at 450, so you get a nice premium.
yeah.
And I mean, if you get 3,000, if you get 3,000 a month, if you time it right, that's like 30,000 a year,
It's
36
amazing,
36,000 a year on your Tesla.
incredible. Yeah, yeah. I mean,
It,
I have to say it's the best trade. Arguably, the best thing to do in options trading is to sell covered calls.
right. And then the time is important, Um, time is very important. So a proper trader waits for the right time to trade. Do you have you had that written down?
Absolutely, timing's everything. I'm gonna rewrite that down.
But you are giving back $2, so it's kind of like you wrote the call for
Well, I actually got
30 points.
$3,019, so I'm still at above 3,000 after giving that $2 back.
Oh, you counted that?
Yeah, I mean, I didn't count that now, but I'm just telling you that it was still over 3,000 that I got paid.
Yeah. So keep that going. When Tesla dips, you know, is it time to sell a put, or you want to try to trade your cover call? But only trade your cover call you think it's going to come right back up.
Right, because then it's a waste otherwise.
And the idea is we're trying to improve those, let's say, 10 cover calls a year. If we say Tesla's at 6%, and let's say the stock is 400 average, 6% is 200 and $2,400, correct?
Yeah.
And then times 10 is $24,000. Write that down. Write that down. $24,000. Let's say that's the base. You're gonna get at least that in a year. So if you can try to improve that, let's say maybe to 30,000, what moves do you have to make?
Timing will be your big factor.
Timing.
Timing will be probably the biggest factor there. Yeah. If you can write it on the days when it's swinging up.
Today it's thir- let's say that a call is, let's say, 30. It's probably already 32 by now, right? 33.
The one I sold this morning.
Yeah.
Yeah, 33.
So if we have a dip in Tesla, let's say we have 20 point dip, that's the time, or even more, maybe have a 2 day dip,
Yeah.
is the time you can buy it back. And then we need another bump up, another 20 point increase, and then we can sell it again. And
Yeah.
ideally, you're selling the same month. So you can do 2 or 3 cover calls in the same month, but sometimes you just want to go to the next month because this makes more sense.
Yeah.
Let's say you buy it back next week at a nice dip, and then you sell it again when it swings back up, either the same month, which is going to be February, or March even. You can even go to March. You write that down. 3 to 7 weeks on your cover calls. Yes.
Yes.
All right. So if you look at a baseline, it's if you're at 6% a month and 24,000 a year, then you're looking to increase that maybe, but if you're trading and it goes the wrong way, you fumble your trades, and you don't think you're getting at least that baseline, just do the basic cover call. Don't bother trading it. You don't need to.
Right.
Also, you have the advantage that you have a couple of contracts, so you can just trade one and keep the other one like on a 2 year,
Yes.
or you can just do one cover call monthly, and then one you can try to trade it to improve.
Yeah.
You can either trade your 2 year or you can trade your monthly. Trading the 2 year is easier.
Yeah, that having all that time is such a game changer, right? Like
Yeah, like if I like a lot of people get confused, I think, with cover calls, and they say, "I'm not doing a 2 year cover call. I'm not going to cap myself for 2 years," because Tesla can go to the moon, right?
They're assuming that it's never going to come down.
Right,
They
right,
think, okay,
and we know that it is.
yeah.
So let me use an analogy about writing calls. I say writing, always writing, as being the house in the casino, because gamblers are going to come into the casino and gamble, and most of them, let's say 95% of them, are going to lose money. Correct? And a few of them will make money. You'll have that story about, you remember that story, man? We went to craps and I took 10,000 to 100 grand, and we walked out there with 100 grand in cash. It's like a story you tell over the dinner table over like
Yeah.
cigars and cognac. But that one time you make money is like a blue moon. Most people just lose in the casino. They lose money. They gamble. They play badly. Most people just keep playing until they lose everything, even if they win.
Yeah.
Play it all back.
That's right.
So I look at that as an analogy, as these call options that are going to expire worthless. All these call options, Tesla, 700 call, 600 call, 500 call. When you're going to the casino trying to play blackjack, trying to play craps, trying to do these risky moves, you're buying these high calls, 490 call, for next Friday, $1 call option on Tesla, whatever that is. There's a 960 for the 2 year. There's a 960 call. It was paying. I pulled that up with a mod. It was paying $7.
Mm.
And you were talking about selling calls, so maybe you don't want to sell that one. I don't know. Probably not, but
I'd sell it just because of the premium, you know. If you can get a premium that's 700, I mean, I don't think it's getting there in a month.
so the analogy is most people are going to buy the call. Let's just say that these newbie investors
Yeah,
are buying these lofty calls, and they're going to spot worthless and lose all their money, and they're gambling at a casino. But what we're doing, we're selling calls.
that's right.
And what's for certain that the time decay is going to, if the stock price doesn't move, the time decay is going to bring a call to zero, 100% chance. Whereas the call investor, when they buy a call, the stock has to move up in their favor. But when we sell a call, it doesn't have to move. It just has to just stay the same. And then we're going to do the rich man's call to go in the money. If we're going to do a Tesla 400, Tesla 350, it doesn't even have to go up. It just has to, it can stay the same price and even go down, and we still made money. Correct?
Yep, yep.
So it's like being in the house of a casino. I did the deep in the money cover call with Ahmad yesterday. He went all the way down to 280 in Tesla, and I think we only can get like $2 or something.
Oh,
But
profit.
one reason to do the deep in the money call is to protect a big gain. So if we're up 30 points, let's say we're up now in Tesla.
For the day, you
Tesla,
mean?
yeah, just say the middle of the day or
Like
for the day.
5.86%, $24 up, 24.6.
Tesla's up 24 to 438 right now.
Yeah.
Right now is a good time to do deep in the money because you're protecting all that upside. And you know for a fact, a 25-point day, 2450 right now, you know that I know that it's not going to be every day.
Yeah.
So what you do, you have a 25-point day, you're a rich man, you say, you know what? I just want to protect my 438 price. It's up 25 points. I just want to go until next month. I'm going to go on my boat. I'm going to go fishing. I'm not going to look at the market. I'm going to go deep in the money on my Tesla because I just want to protect this 25-point gain I made today, and I'm good. I don't need to make a lot of money. I need to protect my profits. So now let's go into the money. How deep do you want to go on Tesla that you think it won't go that deep?
Let me pull up the option chain. Um,
But tell me the price first.
yeah.
Or you want to look at the chart? You want to
Yeah.
get a 6 month chart?
Yeah.
It broke out. I have a low at 182 in the 6 month, and it broke out at 250.
How far out you're looking though? Like
6 month chart.
no, no, no. I'm saying for the deep in the
Oh,
money.
just one month.
Oh, 1 month. So we're looking at the February 21st then.
Yeah.
Um, okay, let me pull up the chart here. 6 months.
There's support at 400 and there's support at 350.
Yeah.
And and I said that
350, 350 and 375. I think 350 is probably where I would think in a month is not likely. As low as it can go, probably 350.
do you see where it has this pattern?
Yeah,
Three,
that's all.
400 and 350. And we look back at that pattern and we see that it bounces off, meaning that there's support there. Traders are going to be like, you know what? It's a support level, and they're going to buy that price there. Matter of fact, a lot of them are trader bots now. They're designed, the trader bots, to buy the support.
Right.
And if they're right, and if there's not nothing else happening, it'll bounce off that that support, and then like here on the right side, is this your right or left? Is your left?
For me, it's the left. Yeah.
On your left side, above my finger, there is support here. You see it?
Yeah. Yeah.
So
9.5 around there.
do you want to do the 400 or 350? This is no
The
difference to me.
350. 350.
Okay, so let's look at February 350.
The 350 is right now. If we were to write the deep in the money 350, let me write that down. Tesla.
Now,
February
consider
20.
that we're protecting our 25-point gain today because the market doesn't know it's going to go back down.
Yeah.
And we're going to get paid all the way. 350 is paid. I'm getting 95 by 96.
Uh,
95.50.
95.50. Let's put the limit at 95.50.
So what I do, the price today is 438.19 or 438 plus 95.50. It's paying you all the way to, that's not right, sorry.
No, you have to go down to
350.
350.
350.
350 plus
That would have been
90.
nice, huh?
Yeah.
350 plus 95.50. It's paying you all of 445. So you can get paid to 445 for next month for deep limit cover call. And what? That's protecting this 25-point gain. So
Yeah.
it's all about timing. You know, I just see what the reason why people I think fail at the market is they're going to these seminars, they're looking at these books, and they say, "Hey, cover call, you sell your upside, get a stock doing cover call," but timing, right, is important. The quality of the stock is important. If you're doing a cover call on the SP 500, you're going to get like a 1.1% a month. It's not even a big deal.
Yeah.
1.5%, and that's not really going to give you a success, I don't think, because of the stock, the market can move more than that. But if you're doing Tesla, getting, you know, in your case, $3,000 a month, 6%, and then you're using the timing in your advantage,
Can you can you
that
remind me?
makes all the difference.
Yeah, can you remind me how we did the ROI on these deep in the monies?
Yeah, so they're paying you 90, they were paying us 95.50,
Yeah,
and it
we
went
already got it for 95.50.
all the way
Yeah.
to 445.
Yeah.
So basically, they're paying us for 445 because you're adding a premium to the strike price, correct?
Correct.
So subtract 445 from what the price is now. It was 438, 437. Let's say 438, close enough.
Right. So
That's 7
447.
points, right?
Yeah.
So 7 points is your profit for next month on a deep in the money cover call on Tesla, and you divide 7 by the current price, which is by 438. So 7 divided by 438.
Times
7
100.
divided by 438.
1.59%.
1.59%. 1.59. I want you to add the 8.
598.
1.598. If you have $1,000,000, the way to steal, by the way, people steal, they take that point 8 and they say, yeah, but you got 1.59. Yeah, I'd be like, and then they take the point 8. 1.598% return. And it's $700 return. And what? A rich man's like, I don't need to make a lot of money. I'm gonna go fishing, I'm gonna go to the Caymans. I just want to protect my money. So they'll take $700 to protect themselves all the way down to 350. Stock can go down literally 80, 90 points. They don't care. They're good. They're protected. It's fire insurance.
Yeah.
And for that, they're going to still get 7 points of premium. And if you did that when it wasn't up 25 points, it wouldn't be as meaningful, correct?
Correct, because the premium won't be paying you as much.
Right.
And then you won't be, maybe you might not even be in a profit at that point. You might be actually losing share loss.
Timing.
Yeah. Timing's everything.
Now, Ahmad thought the Tesla might go down by next month. And so he was looking because it's been having some hot moves.
Yeah.
And he's not used to all this exuberance. So it may, go down. And if that is the case, then you would have you would have done better with a lower call than your 450. But I'm more positive. I think it probably will be up just because of inauguration and because of the timing.
Yeah.
The Trump Musk super team. So I know we did that spread. You know,
I did that spread with you. That was a great spread, 420 to 440, 20 point spread.
explain the spread for the recording.
Yeah. Yeah. So because Tesla's up today, we did a spread where we bought a call for Tesla. This is all expiring February 21st, by the way. So about
1
30 days,
month.
1 month. February. So we did the Tesla 420 call. So we bought that call plus one. And we sold the 440 call minus one. And the cost to do the trade, meaning the cost to buy the 420 and the premium we received to sell the 440, gave us a net debit of I think it was, I mean, I wrote it down, $9, yeah, so $9.31. So 931 was the net credit. That's the cost of the trade. So what you do now is you have a 20 point spread, $2,000. You subtract that 931. So your profit in here is a little bit over $1,000 at max, meaning if the Tesla stock moves past 440 or at 440, you're going to be making at a max 11 like around $1,100.
Correct. A 20 point spread exits $2,000, and if it takes you 900 to get in, that's $1,100 out. $900 in. It's more than 100% return. But we
Great
do
trade.
need Tesla to go to 440 and
Minimum
stay
to get
there.
it. Yeah.
If we don't have that, then we start losing
Yeah, you break even around what was it? 4
40, 429.
429. You start to break even, and then after that
Yeah.
profit.
Yeah. So timing.
That's and then the ROI on that, if you did get max profit is 114.71%.
Yeah. You divide the profit by the investment amount.
Yeah.
Correct. So back on Iron Q, the moment you think you really have faith that it's going to come back, that you really think it's here to stay, and you may not think that for a while. That's when I would buy the those spreads up. Today it's $3 for 15 points on
Yeah.
IronQ. Buy the 30 call for 2 years out, and sell the 45 call. That gives you 15 points of share goal. Only costs you $3.34.
Mm.
So the moment that your account's looking good and you think you're probably not gonna crash, we're gonna go higher. I think the Dow Jones all-time high was 46,000 or 45 something. So we're not that far from the all-time high. If we can break an all-time high,
Go higher.
that would be an indication. I think we break the other high, the old high. That would be an indication of a new bull trend. And
Yeah.
ideally, you want to have the IWM, the QQQ, the SPY all confirmed. And that's when other people are going to be buying, and the trader bots will be buying. And one of those days that we have like a 500,000 point day on the Dow, we broke a new high. And then you know would be that now it's a little bit uh, contradictory because in a sense we're paying more for it if we wait for it to do better, correct?
Yeah.
So ideally, you want to move it up when you have a dip. Make sense?
Yes.
You want to sell when you have the peak. But at the same time, you want to have the philosophy that this is a dip in a bull market, in a strong market, not a dip as far as a crashing. Going to be more of a dip. You were talking about like a dead cat bounce. You know, you got to get rid of all that before you start buying back your calls.
Yeah. You
So
have to know the overall trend. If it's going up and this is just a pullback, then it makes sense to do that.
yes. There you go. So I want to be clear. I'm not just making you throw money away.
No, no, yeah.
Buying at the top, buying back at the top. You want to sell at a peak, and you want to buy at a dip, and that's why you can sell the month cover call, whether in the money or out of the money, make more money today on a Tesla because we're at 25 points, as opposed to doing it when we're down.
Yeah.
And if you look back, you've done a couple calls when we were down, haven't you?
I have.
So it wasn't the best timing, but still you're getting the benefit of what? Of time decay.
Yeah, like I did this on Mara. And of course it pops up today because of Bitcoin. So,
Um,
but
but
percentage
you're
was,
still getting your nice return on Mara, right?
yeah, and actually I was gonna say, like, I put that theory to the test. Let me pull up my Mara trades.
You want to talk about
But-
that?
Well, just real quick, I'll just comment on the fact that so when I did the Mara trades last month, I got paid 3.67%. I'm sorry, I got paid 12.89% on one of the covered calls and 10.71% on the second covered call, right? So about 10 to 12%, 10 to 13.
Can you
Now,
tell me roughly what the share price was and what you wrote to strike?
yeah, at that time the share price was around $28.41.
28,
28. And I
and
wrote
then
the
you
30 and
wrote
the
the
32.
30 and the 32.
Yeah.
Nice. And then 1 month out.
And then just this week, or last week I think it was actually, I did the 20 sorry, I did the 18 and 25 strike, and what I did essentially was, well, actually, sorry, I did one leap and I did one monthly this time. So for Mara, the what I wanted to comment on was that the monthly was still, even though the stock is down, was paying me 11.5%.
Nice.
My point was the dollar value is less, but the percentage value was intact, even though the stock price was down on the covered call.
Right, but also, okay, you're correct, but also consider the strike. You can write a different strike, right? For example, like let's just go back to Tesla for a second. When the Tesla swings up, right? Now you can write a higher strike for more money, correct?
Yeah,
You went to 450 today, got 3 grand. Yesterday, that 450 wasn't paying 3 grand.
of course.
So you're still getting the percentage, but you can also write a higher strike, correct?
Yeah, yeah. Yesterday I would have written a higher strike to get.
Yeah, and the higher strike gets you keyed into a higher strike gets you keyed into a higher share price. Gets
Yeah,
you locked in. That's the word I want to use.
perfect.
And if you're doing a rich man's deep in the money cover call, now we're locked into Tesla here. If we went to 350 at 440, 445 share price, $7 guaranteed, or at least predetermined money.
Yeah.
All right.
What else you got for me, Big G? Tell me something new.
Do you want to do? We haven't really done charting. We could do charting if you want to do
Okay.
that today. I just have some basic charts I want to go over these. You can look these up also, but there's ones that I like more. The trends, right? You see this trend?
Yeah,
So
downtrend.
a downtrend is going down. It's going to keep going down until it changes. Okay. An uptrend is going up. It's going to keep on going up until it changes. Okay. So you buy the uptrend, you sell the downtrend. You can short. You can wait to buy lower. But I wouldn't be expecting buy the downtrend and expecting it to go up. I wouldn't be looking at an uptrend expecting it to go down until it changes direction. So a couple different patterns that I like to use. The first one, a cloud top.
Cloud top.
Yeah. Do you see?
Yeah, we'll draw that too.
This is going down. It goes up, but it's go down because it's going to do what? It's gonna make a cloud. There's A and B. Here's B.
Okay, so that's A.
So it's positive when it's going up, but it's negative when it's going down. So be prepared. I'm not sure why these patterns happen more than not. Maybe it's like psychology, but cloud top, write it down.
Cloud
Now
top.
cloud bottom. Okay, cloud bottom could be a good thing because we're going into the cloud, and what it's in the cloud, it's going to go up at the end. So if you see this cloud pattern happening, this is technically a good thing because we're looking at a future of it going up. Make sense?
Got it.
A common one is a mountain or double mountain pattern. When you see a double mountain pattern forming, it means it's going back down. The mountain is nothing by itself, but the second mountain, and if it's usually the second mountain's lower, it means it's going to go back down. Make sense?
Yeah.
The M is a forecasting a negative result at the last mountain. However, look at the W, which is, I guess you could say valleys or W pattern. When this goes this way and it goes this way again, we're looking for it to go up now. We're seeing it for it to go up. W indicates it's going to be going up at the end. Why this is happening more than not, I don't know why. It just works that way. Now we're going to do mountains. This is a very positive pattern. Mountains going up. These are, I just call them mountains. Upwards mountains. The more mountains you have, the more positive you have, more people making money. They're going to keep on doing these trades. It's going to keep going up until it doesn't. This is kind of like what most trend lines look like, actually. The
Right.
classic trend line, like if you go to Google and say stock market, and they're going to see you show a trend line, not even knowing what they're doing. And then now this is worrisome. Is it going down to you? This is broken mountains. Is it going down to you or going up?
Wait, what did you just turn it upside down? What did you do?
What did I do?
It looked the
Oh,
same to me.
was I like that?
Yeah, that's how it was.
Okay, then how about like this? Now where is it going?
It
Is it
still
going
looks
down?
like it still looks like it's going up.
Um, the one behind me is going down.
Yeah.
Let's see. You know what? You know what the problem is I'm looking at a reverse. When the mountains are going down,
Yeah.
then it's going to keep going down. That's a negative. So this is going down, right? No, this is
No,
going up.
I know what you mean. I'm drawing it in. You're talking about like this. If it wait a second. If it's going down like this.
Yeah, and I'm looking at my here. I have to get it showing. I have to get it showing you right. Let me just draw it. Let me
Gotcha.
just draw it. Let me just draw it. I'll draw it on here. So this here is a broken mountain. I'm gonna put a little dash. These are broken mountains. See how it's going down?
One,
It's
two,
a
three.
broken. The more mountains you have going down, they're called broken mountains, and they're going down, 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 down. This is where you want to short.
Isn't
Uh,
it another way to say these? Like I've heard, it sounds like these are so for the upward mountains, we have higher highs and lower lows, and then this other one we have lower lows and lower highs.
I think they're talking about something else on that.
Sure.
Let's make it simple. Broken mountains are going down. Okay,
Okay.
and that's indicate you can short, you can get out, you can put a stop loss. You know what stop loss is?
Yeah.
Tell me what stop loss is.
It's the price where you uh put in to get out of the position that you're in.
So let's say Tesla, let's say you want to protect your profit in Tesla today, and Tesla's 438 right now. Where do you put a stop loss? You want to protect your gain today.
437.
Um, Ideally a little lower because you don't want it to just hit your loss and then go right back up.
Yeah, maybe you could do 435, 430.
We have a 25-point gain. Maybe go down 5 points.
Yeah.
438 minus 5, 433. Put a stop loss so when it hits 433, if it does, it'll sell. You'll still have a 20-point gain, still good.
Yeah.
However, you want to let the stock breathe, so it can go between 438 to 433, and which you might do normally, and then it can still go up to 440, 450, 460. And what happens when it goes up to 460? Can you move your stop loss higher?
Absolutely.
To what?
If it goes to 460, you can come back to 455 as your stop loss.
Right, and then you're protecting all that profit. The
Yeah.
moment it hits 455, it's going to sell at the market.
Right.
And let's say now it goes up to 480. Now it's past inauguration. Musk is all over the news, and now Tesla's 480 again. We're looking at breaking all-time high, but it might bounce off that mountain and come back down. It might, and you want to protect your losses. You pull your stop. If it's 480, what do you put your stop loss at?
Oh, probably, yeah. We'll do the 5 points lower, 475.
Yeah, so you're bringing up your stop loss as to protect your profits as we go up in the mountains.
Yeah.
The most classic, probably the most powerful pattern I know that I know about is the cup with a handle. When you see this happening, generally it goes, it starts here a little bit lower, it makes a nice little cup, and it starts inching up like this, starts doing this handle. What happens with this is it goes up. I'm not sure why that is. It's a cup with a handle pattern. It's probably the most positive technical analysis that I know about.
Whenever I've seen this demonstrated, the handle is usually like going down before it shoots up. You're saying it's going kind of sideways on the handle?
This is kind of what it looks like.
Okay.
You can confirm it like with online, but the cup is here. The handle technically starts going higher,
Okay.
and if something that'll break out. What it is it's basing is what it is. People buying it all here, spacing. Now it's basing. Now it's basing a different way. Now it's like people are definitely not going to let it go down, and then it just goes up.
Makes sense.
So we got the mountains. We got broken mountains. We're short. We got a basic trend up, basic trend down. We got cloud top, cloud bottom. You mentioned descending and I think triangle, correct?
Oh, I showed a wedge.
Yeah, let's do the wedge and that'll finish it. I think. Listen, this is the thing. These are just basic technical analysis that are more right than they're wrong, and when this happens, it's more likely we're gonna have the result, right? So let's do the wedge, and that'll be the end of it for the patterns.
Okay.
I want you to teach that to me though.
Well,
Draw
the
draw
wedge.
your draw your wedge. Draw your SPY going down, showing us a downtrend.
Okay.
We know what corrected, but
Yeah, yeah, yeah. Okay, so let's say we got this, and we got the stock doing this. Okay, so, oops. Hold
yes,
on. We'll find it.
ascending wedge.
Wait a second. God damn it.
Just put it by your face. Put it by your face.
Okay. So basically what I showed is you got
Going
a
up.
two parallel channels.
Those are
Um
higher. Those are higher highs and higher lows. That's what
I
that
actually drew
is.
it backwards. It's showing it wrong on the video. I actually drew it descending. So
For
I was
for me,
saying,
it's going. For me, it's going up.
so imagine if it's the price is right here. Chances are,
For me, it's going up.
so yeah, but I was drawing it side down. So if the price is in this channel going kind of down, then my understanding is that there's a high chance it can go touch this line and either rebound or it can break. And you're only going to break out of this pattern if it goes above this descending line. So it has to break out of this for it to change, or it has to break out of this bottom one to go down further.
For me, that's going down, and
Okay.
the more it does that, the more it's going to do that.
Yeah.
Now turn it upside down. See if you can see it going up.
Yeah. So like if we're looking to
That'll be
go up,
an ascending pattern.
yeah, same thing. So now it's got to break this top trend line for it to keep going up.
Right, right, right. So when it's going down like this, it's doing this. It's doing the W's.
Yeah.
It's like broken mountains going down, but
Broken mountain.
within a pattern. But within a pattern.
Yeah.
And that's
It's like a range, you could say. It's like within a range kind of
yes.
following.
So those patterns are likely to continue.
Yeah.
It's a downtrend, and like it's tough to buy that. They say never fight the market. They say don't fight the market when they're going down. You have to go short, or you have to be patient. You have to buy lower. But you can't be pouring money into call options when the market's going down. Correct?
Yep.
And I consider timing. We have inauguration. We have Elon having probably a big part in the administration, and his big stock Tesla is doing great. It's not a coincidence.
Yeah.
Timing. So you can put put timing with technical analysis, and you pretty much have a winning strategy. Timing with the cover calls. Cover calls are already good by themselves. Even if you run a cover call in a down market, down day, it's better than not doing it. And you
Yeah.
put timing to that, and now you have an improved trade. Questions?
Yeah. In these patterns, like, um, well, first, like, I want to see an example of this cloud pattern that you're talking about. If we can find it on a chart somewhere, we don't have to do it right now, but eventually it would be good to see.
I'm going to give you one example. I was shorting Bank of America back in 2008
Uh-huh.
in the housing bubble. It had 5 broken mountains,
Okay.
and I saw it. I don't know what people didn't see it, but they thought maybe Bank of America was doing better. It was a good buy. Um, you can go on your own and find these patterns, and we off time we can confirm them.
How
But
were you shorting? Were you shorting shares or puts or both?
both,
Both.
I had short shares because the shares have no time decay.
Right.
That's why people apply short shares and not buy puts, because puts have a time decay. You know.
You have to pay an interest on those.
Yes, you're paying a premium.
And your maintenance is, I think, 100%.
Yes, it's all cash, but you have leverage also. But the more leverage you have, the more risky it is. Correct?
Of course, yeah.
Yeah. And you know about the first short seller shorting
Yeah.
diamonds.
Yep, yep.
Prices going down. You see the ship come into the harbor filled with diamonds. It's a no-brainer. Diamonds gonna go down. Short. You see the trend. Short. You get confirmation. The stuff starts going down. We have broken mountains. We have a descending wedge. We have a cloud top. Cloud top's gonna go down. Cloud bottom's gonna go up. W is gonna go up. An M is gonna go down. Support. Oh, support and resistance. That's one more. The more a stock hits, let's say Tesla hits 400, it goes back up. Tesla hits 400, it goes back up. Tesla hits 400. What trade are you gonna make?
You want to buy that support, it's gonna go back up.
Yeah, it's gonna go back up more likely, because it's like maybe psychological. Look, if people want to buy that 400, man, it's a good deal. It's just collectively, the mass consciousness is like Tesla's a good buy at 400, and they go back up,
Yeah.
and that's why trends are technical analysis is not random. Trends are not random. There's a method to it, and there's basic and there's advanced technical analysis. You really only have to know the basic. The more technical you get, it's like there's Fibonacci. There's all kinds of other things. I don't really do Fibonacci. I looked into it, but it's kind of like I want to bring you from the average person into being able to make money consistently,
Yeah, I feel
and
like the
it
more of the
doesn't need
advanced
to
stuff
be
is for day
advanced.
trading, right? Wouldn't you say? Like the more the advanced technical analysis is more for day trading, not for what we're doing. Like you don't need to be watching tick for tick and seeing what it's doing on the minute chart and then doing analysis on that.
I agree.
Yeah.
Now, I want me to tell you one of my favorite trades.
Please. You mean you've been holding out this whole time on all your favorite
Yes,
trades?
yes, I have been actually because you weren't ready for it. That's why.
Oh gosh. All right. Let me go. Let's go.
The straddle,
Hey, there you go. I want to know about
the
this.
straddle. Let's pull up Tesla though. Tesla might not be a good. The straddle, you're selling both a call and a put.
You're selling both the call and the put.
Yeah. The magic of the straddle, and the reason why it's a good trade, not because it's selling both call and a put, it's obviously a net credit because you're getting money back. So you're
Yeah.
selling both a call and a put. Let's say at the same price. So let's say you have Tesla here, 438, and if you go out 1 month, and you're 433 now actually. You got 1 month, and you for February you sell the 430 call and the 430 put. How much do you get?
Hold on. Thinkorswim is being weird. Let me just go back to Tesla. So you want to do a month out. Say those strikes again.
The 430 call and the 430 put for February.
21.
That's the classic straddle.
So if we said 430,
Actually, it's closest to the 435. 435 call and the 435 put. How much are you getting paid?
so we're buying the call or selling the call?
Selling both.
Selling both. Okay, hold on. Sell both. So 435 call to sell is giving us 3605 or 36.
This is 36, and then the 435 put is paying what?
435 put is paying us. So for the put, I would also do a bid, right? Yeah. So for 3640.
Um, let's just say 36 just to round it off because it's easier. You can do a limit order and get a little more, but we're gonna get paid for on both sides. How much premium is that?
Sell call, sell put. Hold on, I'm still following the trade. So 435 is a strike.
It's it's um it's nice to see you. I can see your brain like learning. Like, what's happening?
Yeah, no,
It's kind of it's
I
very interesting to see that, and it happens not with all the clients.
yeah. So if you're
Yeah,
saying,
you're short both. You're selling the call and you're selling the put,
yeah,
and you're getting paid for both. So how
if
much
I'm
premium are we getting if we sell both? The 435,
36 times two, what is that?
72, seven thousand two hundred
72.
dollars. Now here's the magic of the straddle. Not that you're selling both. Here's the magic of it. Only one side can be assigned, not both. So when one person's doing selling a call in one account, they're getting paid 3600, correct?
Yeah,
Another person selling a put in another account, they're getting paid 3600, correct?
correct.
If you're doing the same account at the same time, you're getting paid both 7200. But here's the thing: only one side can be assigned. You can't be assigned on both. So either it's going to go down below 35, and you'll have, in this case, a naked put. Okay, and you'll have to buy the shares at 35 and you hope it doesn't go down 36 points. Make sense?
Yeah,
Because if you sell 35 put, you get 36 points of premium, and if you lower it to 36 points, if the stock drops 36 points, it's a wash. And below 36 points, you start going into losing. So if the stock is 435, you would break even would be about 399 on the naked put side, right? 36 points down, correct?
390, 36 points down. Yeah.
Now on the call, if you're doing a call, selling a call, the stock is 435 and you get 36 points. Ideally, uh, you want that call to expire worthless. So you want it to be below 435. And you get the full 36 points, walk away, $3,600. You got $3,100 for your call, so you did good.
Right.
But this is even going at the money a little bit more, okay? Now, when you sell the call, if you sell the 435 call, you're short on 435. You don't want it to go beyond 435. You want it to be lower. Like Ahmad could have done this call if he was more you know conservative and thinking Tesla was going to drop by next month. You can sell this call. Okay, you get 36 points of premium, and if the stock raises 36 points from 435 to 80 to 91, for 491 he breaks even. At 492 he loses $100. Does that make sense? At 493 he loses $200 because now he's short, and now uh, you're short the call. Make sense?
Yeah.
So the magic of the straddle is you get paid on both sides, but only one can get assigned. And write this down, because only one side can get assigned. They only hold half the requirement. So let me say it a different way. You're getting paid on both sides of the trade, but you only have to hold one requirement for one of the sides. So let's say the requirement is 50% because we do need to be able to take those shares. Okay. We assign them the put. We need to be able to take 100 shares of Tesla at 435. Okay.
Yeah.
If we sell the car, we need to be we're going to be short 100 shares of Tesla at 435. So we need to have at least 50% of that money, and that's 50% margin trade. But you might want to have 100% of it, and you won't be any margin. But let's just say they hold 50% because they don't hold they can hold around 30%, but you gotta have but you gotta have enough to take the shares, right? So I'm gonna say 50%. Okay. So if the stock is 435, 50% is gonna be, again, we're talking about what maintenance requirement. That's the important thing. 435 divided by 2, which is 50%. 217 points, or 21K, 21.7, 21.75K. They're going to hold 21.75K to do this trade. But here's the thing. They hold that for the call or for the put anyways, or a little bit less, but I'm just rounding it up.
You're saying for the naked call or put?
Yeah, but they also hold 21.5K if you do both. Because why? Because only one of them, you can't get a sign on both. You can't be short and long. If the stock goes past 435, you're going to be short to call. If the stock goes below 435, you're going to be short to put. So only one could be assigned.
There's a catch here. There's got to be. There's got to be there's got to be a situation where you can't make money on this.
Well, we're going to get to that in a second.
Okay.
There's no catch, by the way. You're going to get paid 76 points, my friend.
Yeah.
And you're only getting, they're only going to hold 21K. So let's just do the return, can we?
Okay.
76 divided by 217.5, which is half of your strike price. 50% requirement. 34.9% return. Well, not exactly true, because technically you're going to be short 100 shares if you sell a naked call, or you're long 100 shares if you sell a naked put. So let's just do the full amount. I don't want to put you in margin, okay? Even though they're going to hold a 50% requirement, I want you to have the full cash to take the shares. So it's actually 430. It's 435. So let's do it again. 76 divided by 435. You have the full cash. You have 43K to take the shares. 17.4% return. That's your return. Now, here's the thing. Divide this by 2. Normally, you're gonna get 8.75% return to do to sell the call, you get 8.75% return, and also to sell a put, you get 8.75% return. But what you're doing, you're doubling your return when you do the straddle. You're getting times two.
Yeah.
If you can see this, 17.4% return when you do the straddle. Now, the only catch I can think of is even though only one side can be assigned, it's actually double the chance that one of them will be assigned. So, in this case, one will be assigned because you're doing the straddle, which is the same price, 435 on both sides. So if you're getting 76 points and you're going to be long or short Tesla, what's your break even? Can you tell me? And for Tesla, it's 435 right now. What's your break even if you get 76 points? Either you're going to be long or short, either one. Can you tell me?
So if you're doing 435 and you got paid 36, so 471 is the break even on the call, and 399 is the break even on the put, right?
Sounds about right. Let me double check your math.
I did 435 plus
435 plus 76.
No, 36.
76.
Oh, right. So then it's wrong. Then I did it wrong.
I get 511 on the call. The test can go to 511 and you're good. And then on the put, 435 minus 76. Because you're getting 76 premium.
Yeah. I got you.
The put, it can go down to 359 and you're still good. You're still, it ate up all your profit, but you're still technically at a wash at 359. And if it stays 435, you get the full return.
Okay. So I've heard it said that you do a straddle when you're expecting a big move on either side.
No, you buy the straddle.
When you're expecting a big move on either side.
Yeah. So let me actually clarify. You can either buy the straddle or sell the straddle. You can buy a 36 call. You can buy a 435 call for 36. You can buy a 435 put for 36. You can do that too. It'll cost you 76 points. And but normally when you do that, you're buying not at the money. You're doing what's called a strangle, which is you're getting specific prices. So here's a 435 right here. Okay,
Yeah.
I'm showing you selling about 10. I generally never do a flat straddle. Generally never do that. I've done it before, but in that case, I don't want the stock to move. But normally what you're doing a strangle. So instead of the 435, you sell like give the stock some room to move. So now I'm gonna tell you how to perfect this trade, and this is the real trade right now. Not to get 76 points because now you're gonna definitely get a sign, and you're gonna definitely go into the money on one of them, and you probably won't get 76 points unless Tesla's at 435 exactly, which it probably won't be. But the theory though is the stock doesn't move, you get 76 points, you get 17% return. Okay. But now we know that the stock's either going to go down or up, so it's probably not going to be exactly 435. So what you do what's called a strangle. You're going to specifically put the straddle a certain way. Now, how much does Tesla move? You tell me. A
40,
month.
well, in a month?
Yeah, just
30, 40 points.
Let's say 40 points or 30.
240.
Or let's do 40. So now let's go from the strike price of 435 and let's add 40. 435 plus 40 for the call. That's 475, and then minus 40 for the put. 435 minus 40 is 395. Is that right?
Yes.
So what you're gonna do? Here's how to perfect the trade. You're gonna sell a 475 call and you're going to sell a 395 put. Because why? Because you're going to let Tesla breathe in that room. Nothing's going to happen in the middle. Nothing. You're going to walk away with full premium. But if it goes below 395, now you're going to be short. Now you're going to be assigned Tesla shares on the naked put. And on the call, if it goes above 475, now you're going to be assigned a block of short shares, meaning you're short at 475.
Man, we should have started the session with this straddle because now I'm so interested. I don't want to stop talking about this.
You're gonna have it on the recording. So let's
Oh,
get the prices. Let's get the premiums. I need a 395 premium for the put. I need the 475 premium for the call.
the
And see how much we're gonna get.
395 is 54 and 475 is 20. So you're gonna get back 76
No, no, that's not right.
if you're selling both, yeah. Because the 395. Oh, I'm sorry. I did both calls. My bad. One, so we're selling the 475 call and we're selling the 395
Put
put. So you're actually gonna get 39.78.
399. I'm getting about $19. 395 is about $19.
395 is about $19. What do you mean by that?
The put
Yeah,
for
it's about 18.
for
Yeah,
February.
yeah. Mine's showing 1875, but yeah, about 19.
Let's round up. And then the 475 call is what?
475 is paying 20. Let's do, yeah, 20.
20.
It's going to 21 now, so let's do 21.
21's even better. Sometimes when you wait, you get more money. All right, so 21 plus 19 is how much?
Three. Oh, wait, 21 plus 19?
Yeah, because we're selling both.
Yeah, so that's 40.
4 grand. So you got a 3 grand from your call. You selling your call. I'm showing you how to make 4 grand with the same investment money because they're only gonna hold it. They're only gonna hold the money for one side. So you only need technically to be fully cash without even any margin. You're only gonna need let's just say 435. Let's just say 43K. We don't know if it's gonna be short or long. But here's the thing. If Tesla moves between 475 and 395, which is probably will move because you didn't think it would go beyond those,
Yeah.
we walk away with 4 grand, nothing happens, we're good. We made 4 grand. If it does break through 475, now we're going to be short Tesla, and if it goes to 480, we lost $500. And a break even is going to be 475 plus how many points? 40.
Mhm.
Yes.
Yeah.
So 515, we are at a wash. If it goes that high,
Yeah.
and then the 395. What's the break? 395, we get full premium $4,000. But what's the break even if it goes lower?
So it'll be 395. 376.
I get 355.
You did 395 minus 19?
Four minus 40
Oh, okay.
because you keep forgetting to add the call premium. We're selling both.
Right, right. Okay.
So if it does go into the put, which means it goes way down, we break even at 355, and below 355 we start losing money.
Okay.
But the magic of the straddle when you make it to the strangle is that the shares sometimes can move between 475 to 395 and we're good. We still get 4 grand profit regardless. And only time we start losing our premium is when it eats into our strike price of 475 in the call or 395 in the put. And again, we break even at 515 on the call, and we break even at 355 on the put. And below that on the put, we lose money, and above that on the call, we lose money. But as long as Tesla behaves, we're gonna be right there making 4 grand a month, and that's actually a very good strangle, by the way. 40 points. Let's say I agree with you on Tesla moving 40 points a month, up or down. Then that's what I would do because I don't want to get assigned. Write this down. When you do normally when you sell options, you don't want to get assigned normally. So when you sell this straddle, you don't want to get assigned. Write that down. You want to stay between your what I call write this down buffer. There's a buffer between the 475 and the 395. As long as Tesla's going to stay within there, you walk away with both sides of the premium scot free. Take it to the bank. So let's do this. Even though we're at inauguration and stock may shoot up, I just want to compare our our Strangle trade with your cover call trade to see which one's better. And right now, um, we're at a 10-point improvement on the Strangle because we sold both sides. We got 20 for one, 21 for one, 19 for the other. Got 4K. And as long as Tesla stays within this range, we're going to get the full profit. And let's compare it to your cover call, which you wrote today, which was a great cover call, by the way. Great timing on that. And we'll have to see by next month what trade did better. How's that sound?
Sounds good.
We'll still be talking about next month.
Sports. Are you kidding? We're gonna do 10 more.
All right.
You've been holding out all the good stuff on me. I know you got more in there.
Questions on the Straddle and Strangle.
I gotta go through this. I'll get the next
I can
question.
tell, I can tell you're just like, wait a minute. So again, you're able to sell both sides instead of buying the put and buying the call. You can sell a put and sell a call, and you get paid for both. And they're going to hold half the requirement because both sides can't get assigned. If you have a cover call in one account, they can put one. I'm sorry, and they can put one account and they can call one account. In these accounts, one will be assigned and one won't be. You know,
Yeah.
when you put them together and think like that, only one side's going to be assigned. So because of that, they only hold half the requirement. So you're technically getting double premium, the same requirement, and the risk is that there's a double chance that either it's going to go lower or higher, and one may get assigned. If one may get assigned, hopefully it doesn't go so much into the money that you lose your whole premium. In this case, 40 points.
Mm.
So, and once again, our break even is 515 on the call and 355 on the put. Now, I want to add one thing. Because you have unlimited risk on the call side, what I like to do, I like to make it into a spread, you know. So let's say Elon reveals his robo army, AI quantum, and Tesla goes to 600. Now we're in trouble, right?
Yeah.
Because our break even is 515. So what I do, I'm gonna go ahead and buy the higher call to protect my call side. So I'm comfortable selling the 475 call at for 21 points. But if it does hit, because we're selling the put, we get an extra premium. If it does hit 515, is that 40 points? 25. Oh no, 25. Yeah, yeah, 515. After 515, you're gonna lose everything. So I'm gonna buy. I'm gonna spend, let's say, $5. Or you know what you can do? You can spend 20%. You can spend 20% if you're getting 40 points. You can spend 20% and buy the lower put and the higher call to make it a spread. So in this case, $8. So
Mm.
$4. So I'm gonna look at it for. I'm gonna go to $4 on the call. The $4 call is 610. So when you short the 475, you have unlimited risk to the upside. And like you told me, Elon Musk said, if you're shorting Tesla, you're gonna have a tsunami,
Yeah.
right? So didn't he say that?
Yep.
So so on the 610 it cost me $4 to buy the 610. So I'm gonna cap my loss at 610. I know it's probably not gonna go that high, but just in case I want to get cleaned out. So 610, and I spent $4. So now your your profit's gonna go from 40 points, $4,000 to 36 points, which is $3,600. You're gonna buy the 410, the 610 call. What that does, that gives you a maximum loss on the call side. It makes it a call credit spread. 475 to 610. Let's do the math on that. That's a hell of a lot, but still, it's better than nothing. 610 minus 475. You got a 135 point loss on there. minus a 40 point, minus a 36 point premium, minus 36 premium. You can have a 99 maximum 99 point loss, which is $9,900 loss. So you're capping your loss at 9.9K. And the normal things that happen, you're going to normally get 4K from this trade as long as Tesla stays between 475 to 395. You're going to walk away with 4K. I'm sorry, 3.6K now because you bought the 610 to make it a spread to protect you from a higher being assigned at a higher at a short call. And the put, I probably won't protect myself from the put, but you can. But you can. Let's just do that. Let's spend $4 and buy the lower put because
I
why?
gotta
Because
go after this big G. I'm running out of time now.
well, let's just call it then.
Yeah, maybe let's continue this
Uh,
next time.
Good session.
Yeah, great session. Thank you.
I'm gonna stop the recording.